Well, Nvidia executing that 10-for-1 stock split after the close today, with the stock closing at about $1,209. So shares will begin trading on a split-adjusted basis when the markets open back up on Monday. For more on what this means to investors and the AI trade broadly, we're bringing in Paul Hickey, co-founder of Bespoke Investment Group. Hey, Paul, good to see you.
Hey, you too, Julia. How are you doing?
I'm doing great, thank you. This has been a fun story to watch, the Nvidia story that is, with the stock split being the latest news there, along with the earnings. And I know you've written a lot and thought a lot and looked a lot at the trading patterns that we have seen in Nvidia. So as we now factor in this stock split, what does that do to sort of your view on the whole phenomenon?
You know, I don't think the stock split is much of a big deal. I mean, yes, it allows retail investors to buy shares of it. It's a lot easier to buy a $100 stock than a $1,000 stock. And while brokerages have fractional shares, it never sounds good to say, hey, I bought a tenth of a share of Nvidia. So I think in that respect, psychologically, it's a good thing there. This run that we've seen, though, is just unlike anything we've ever seen. Like you go back to all these comparisons. We just think about the last year with Nvidia. It went from 1 trillion to 2 trillion market cap in 9 months, and then went from 2 trillion to 3 trillion in about 3 months. So in just the span of a year, it's added 2 trillion in market cap, which is more than Amazon, is like the entire market value of Amazon. So that kind of run is just insane. It's up 22,000% over the last 10 years. And if you look at all the other mega caps today, over any 10-year period in their history, Microsoft is the next closest, as it went up about 13,000% in the 90s. So this kind of move is unlike pretty much anything you've seen amongst current mega caps. But it sort of reminds me, if you remember back to the late 90s and Cisco, the run in Cisco. Cisco was in a very similar position in the internet as Nvidia is within the AI space today. So that's something to keep in mind. And when we did a comparison of Cisco following the IPO of AOL in the early 90s, which was a seminal moment in the early days of the internet. And if you compare that to how Nvidia has done since 2016, when Google first, Sundar Pichai, said that we're now an AI first company. So that was a seminal moment in AI. And you compare the runs of those stocks over those periods, they're nearly the exact same up until this point.
Here's my question about that, Paul.
Yeah.
When Cisco had that run, what was its PE, right? So, I mean, to me, that's been one of the most interesting things about Nvidia, is that even as the stock has skyrocketed, because the earnings are kind of keeping pace here, the price to earnings ratio has not gone crazy.
Oh, no, you're absolutely right. And so I wouldn't say that Nvidia has to crash from here by any stretch of the imagination. But what this stock has done is it's to keep that growth pace going forward. It's just the numbers are just become too high, and it just takes up all of the other market cap of the companies in the market. So I think it's an unsustainable pace. But the key is to remember is back in the 90s, Cisco had the monopoly on routers. There were other networking companies, but if you really wanted to build out your internet infrastructure, you had to use Cisco products. Today, if you want to build out AI, you have to use NVIDIA chips. And so at both Cisco at that time and NVIDIA now, they have what seems like insurmountable leads. But at some point, the competition, comes into the market. Success breeds more competition. And I think over time, you'll see that. Again, I don't think NVIDIA is a stock that's going to go crashing and burning from here by any stretch of the imagination. But a lot of the move and the positive fundamentals have been priced into the stock at this point.
Yeah, and it's important to keep that history in mind as well. Speaking of history, more recent history, We've got the return of 2021 with the meme stock situation. And I don't know if you watched the Keith Gill live stream today where he was just kind of hanging out, talking about GameStop and also trying to get people to guess what kind of beer he was drinking. Paul, I'm just curious what you make of this, especially, whether we're seeing some parallels with what we saw in 2021.
So, I mean, I don't think it's as widespread now as it was in 2021. In 2021, stocks, all these heavily shorted stocks were just going bananas. It wasn't just GameStop. Now it looks more isolated, but GameStop today, the volume was higher than, I think you have to go back to March 2021 to find the last time its volume was this high. I mean, I think, there's a lot better ways to waste your money as an investor than to try and ride that stock. But, I think it's much more contained, and it's what's the market cap now today after today's move? It's maybe like 6 or 7 billion. So I mean, that's like a 10 cents in Nvidia stock right now. So it's very contained, and I don't think it's a broader market issue to worry about at this point.
GameStop's market cap, $9.9 billion, believe it or not, Paul.
Even after today?
Even after today. So I can only imagine what it was yesterday, if that's right. Maybe that's not the closing. Maybe that hasn't been updated for the close. We'll get that number. Paul, it's great to see you in any case. Have a great weekend.
Have a good one. Take care. Thanks.